Hello, I'm Carolyn Herbert from the Finance News Network, and joining me on the phone from Auswide Bank is CFO Bill Schafer. Bill, welcome to FNN.
Thank you, Carolyn.
So for investors who aren't familiar with Auswide Bank, can you start by giving us an introduction to the company?
Auswide Bank was founded back in 1966 and celebrated its 50th anniversary this year. The company was listed on the ASX in 1994. We're headquartered in Bundaberg in Queensland, and Auswide has grown through a series of mergers and acquisitions, as well as organic growth during its history. Auswide was a building society until we converted to a bank in April of 2015 on receipt of our banking licence. The bank has 24 branches spread across Queensland from Brisbane to Townsville, and we have just for the first time exceeded $3 billion in assets, which was a milestone for our bank.
Thanks, Bill. And now to your FY16 results. What were some of the highlights?
Carolyn, the cash underlying NPAT increased 2.8% to just over $14 million in Financial 16, and that was on the back of solid loan book growth. The statutory NPAT was down by around 11.8% to $11.7 million, but this was due to about $3.8 million of one-off expenses that we incurred, and that was mainly as a result of the merger with YCU and a large-scale branch rationalisation program that we put into place. The organic loan book growth was 8.9%, which we believe was above system, and certainly above system for our area in central Queensland. If you include the merger with YCU, our loan book saw growth of 14.4% across the year to $2.7 billion. The NIM contracted 2 basis points compared to financial year 15. We think this was a pleasing result given the fierce competition in the marketplace for home loans and the pressures we faced on our funding costs across the financial year. On the basis of those issues and based on the increase in the underlying NPAT result, EPS was up 0.4%, although we had incurred all those one-offs in the financial year 16.
And what was the dividend for the year, and what does that bring the total dividend to?
The board resolved to maintain the final dividend at 16 cents for financial year 16. That was the same as the final dividend for the previous financial year, and the total dividend at 30 cents was also equivalent to the prior year total dividend.
So, Bill, what was behind these results?
Well, Carolyn, I think the main issue, of course, and the building block of our results was the growth in the loan book. As I indicated, that was 8.9% on an organic basis and 14.4% if you include the acquisition of YCU. But of course, in growing the loan book, you also have to maintain your NIM. And we were able to maintain that within 2 points of the prior year, 196 points, just down from 198. And that resulted in a 6.1% increase in our net interest revenue across the financial year. That was also backed up with pretty sound arrears management. Our arrears greater than 30 days past due is sitting just below 1%, which is below SPIN for other banks and well below regional banks' SPIN factors. And also we're looking at expense control while we're investing in technology and infrastructure for the future, which is a very fine balancing act.
Taking a look at competition now, Bill, how does Auswide Bank position itself within the competitive landscape?
Yeah, that's a good question, Carolyn, and it's a tough one to answer. But it is a situation where in the environment of low interest rates, competition is fierce, and we do face that on a daily basis. But we have gone out into the market in this financial year with campaigns that are competitively priced and have given us the ability to compete with the majors and the regional banks. We've also have products which we believe have attributes which enable us to compete in the market, and we've invested in our brand and the promotion of those products in our key areas across Queensland and interstate.
And finally, Bill, what's your guidance for FY17 and what are you hoping the bank's going to achieve over the next year?
So the objective of management and the board is to see steady growth in our EPS and the resulting dividend, and the progress we make in our belief, it must be sustainable, and the quality of our loan book, which is high on our agenda, is a key to future success. And on the back of the YCU merger, it'll be important to take advantage of both the expense and revenue synergies from that transaction to increase our return on equity. And I think finally, one of the objectives that we have stated publicly is that the company will be on the lookout for further M&A opportunities, because that will enhance our footprint and complement the business model that we have here in our head office in Bundaberg.
Bill Schafer, thanks for the update.